Should you be filing taxes as an S-Corp? Once you start diving into this business world, you will start hearing from a lot of people, advisors and friends or people on YouTube, about the concept of filing taxes as an S-Corp. And this is quite a challenging concept, I believe, from beginners. And I'm gonna dedicate this video in explaining what that is and why so many people, including myself, choose to file taxes as an S-Corp as opposed to a partnership or as a sole proprietorship. So the first thing that I wanna demystify is you'll see out there a lot of YouTube thumbnails and a lot of people even saying or asking the question, should you file taxes as an LLC or as an S-Corp? And this is the wrong question to be asking, and here's why. The concept of an LLC is not the same thing as the concept of it as an S-Corp. We are not really talking apples to apples. They're two different things. So an LLC is a legal structure. So imagine this like circle in here, like this shell for your company. And there are four main types of structures, company structures, that you can create and you can incorporate your company. There's this one video, I believe was my first ever video, that I explained the types of structures that you can have and the differences between them. So you can have an LLC, a limited liability company. You can have a sole proprietorship, you can have a partnership, or you can have a corporation. So those are the four main types of structures that you can create. On one side, you have an LLC, and on the other side, you could have a corporation. Now, an S-Corp, so imagine this big circle here as a corporation. In the middle, your tax designation for this corporation could be either a C-Corp or an S-Corp. And then the same thing goes for the LLC. So imagine again, this big circle here of an LLC, and inside of the circle, you could choose the tax designation that you'd like. And one of the tax designations is an S-Corp, and the other type is going to depend if you have partners or not. If you are a single member LLC, meaning you are the only owner of this LLC, your default tax designation is a sole proprietorship. If you have partners, your default tax designation is a partnership. So the question to be asked here is, should I file taxes as a partnership or as a sole proprietorship or as a S-Corporation? And that does not mean that you took your LLC and you turn it into a corporation. We will forget this side here for now, and it will focus on this side here. It just means that inside of the company structure that you created, an LLC, you have the choice to be taxed as an S-Corporation or as a partnership or a sole proprietorship, depending on how many partners do you have. That's what we're talking about here. Sounds good? So for the sake of this video, this is the scenario that we'll assume. We'll assume that I have an LLC. So I incorporated an entity as an LLC, and I'm trying to decide if I am going to file partners as a sole proprietor because I am the only owner of this LLC, or if I'm going to choose to file as an S-Corporation. And this is the same exercise that I went through when actually choosing an S-Corporation. So I'm just going to mimic what I did and show my reasons for choosing an S-Corporation. So the first important concept here is an LLC is a pass-through entity, meaning the company, the LLC, doesn't pay taxes itself. You, as the owner, Julia, will pay taxes on behalf of the net income that is generated in this LLC. Doesn't matter if you choose to be taxed as a sole proprietorship or a partnership if you have partners, or if you're choosing to elect an S-Corporation tax designation. You're pretty much telling the IRS, hey, I have this LLC and I am choosing to be taxed as an S-Corp. In both scenarios, the entity, the LLC, is not going to pay taxes. You will. It's a pass-through entity. Okay, so you might be wondering what's the difference. And the main reason that people choose to be taxed as an S-Corp instead of a sole proprietorship is self-employment taxes. So what are self-employment taxes? So it's the FICA taxes, is the Federal Insurance Contribution Act, and they are divided into two categories. The first one is the Social Security. So that's the tax that funds retirement, disability, and survivor benefits, and it's 12.4% of your taxable wages. The second part of it is Medicare, which funds the healthcare benefits for individuals age 65 and plus and certain disabled individuals. And that is 2.9% of of taxable wages. That means that if you sum up the two taxes, 12.4 plus 2.9, that is 15.3% of your taxable wages that goes into this bucket of FICA taxes. And 15.3% is a lot. And that is the reason why most people are trying to minimize the impact of those taxes. So the thing is, you and me are paying FICA taxes regardless if you have a job and if you have a W-2, so meaning like you have a regular normal job and you have someone paying you, or if you are self-employed. The difference is that most people just don't know, or they don't realize that they are paying for those taxes when you have a W-2. And it's kind of confusing because they're also not called self-employment taxes unless you're self-employed. So we are paying Medicare and Social Security taxes, and they're just called payroll taxes if you have a payroll. But once you become self-employed, people normally talk about those two same taxes, Social Security and Medicare, as self-employment taxes. They're the same thing. It's confusing. But it's important to know that if you have a W-2, you are not paying those taxes alone. You are paying half of this. So you, as an employee, is paying 7.65%. So you literally pay half of the Social Security amount and half of the Medicare amount for a total of 7.65% on your payroll. And you don't even see this amount. It doesn't hit your bank account. It's like deducted from your paycheck, and your employer pays the other 7.65%. So the impact on you as a person receiving a salary is much lower as the impact of someone who's self-employed. And you might be wondering, okay, so why on one side I'm paying half and on the other side I am paying the full amount? It's actually pretty simple. It's because you are both the employee and the employer once you're self-employed. So you are acting as both parties. So you are paying the full amount at 15.3%. Does that make sense? So here on the screen is an example of a W-2. It's a piece of a W-2 that I created for the example of this video. And you can see that this person is making $2,500 in this payroll period. This could be monthly, this could be weekly, this could be whatever payroll period your company pays you, but the gross pay is 2.5. And you can see here that we have Social Security taxes in the amount of $155 and Medicare taxes in the amount of $36.25. If you calculate this as a percentage of your gross pay, in this case, the gross pay equals the taxable wage because this person doesn't have a 401k or health benefits that are usually discounted in this amount, and you will match the exact amount of 6.2% and 1.45%. So this person receiving the salary has the 2.5 as gross. They deduct all the taxes, and within the taxes, we can see that we have 6.2% of Social Security and 1.45% of Medicare, and the net pay of this person happens to be $2,100.11.52. So the person is paying half. The other half is being paid by the employer, and here's how you can see the employer paying the other half. So because I run payroll for my company, I have access to this payroll provider. I happen to use ADP, and I'm gonna pretend I'm gonna run an off-cycle payroll so you can see the taxes from both the employee and the employer. And I think it's much easier to understand if you see this happening in real time. Most of you probably have never seen a payroll tool or have run payroll for many people, so that should be interesting. So I'm gonna click here on the side of run off-cycle payroll. I'm trying to minimize my screen to the max, so you might see a few parts that are cut off. And I am going to run an off-cycle payroll. Let's say that this is for the period of February 1st through February 14th, so it's every 15 days that I run payroll in my company. I am not selecting any of those deductions, and I'm gonna enter pay. Yes, continue. So here I have a list of the employees of my company. They are blurred out because you don't need to see who works in my company. And I am gonna put regular hours of 40 hours a week. Well, so let's do 80 hours. And we're gonna do the salary amount of 2.5, which is the amount that I showed you in that first example. I'm not gonna do overtime, I'm not gonna do vacation, sick, personal hours. I'm just gonna run it like this, and I'm going to preview this payroll. So here's a payroll preview that I'll be running. So we can see here that we have the employee on one side, and the employee is going to receive the gross amount of 2.5, and as we discussed, the taxes on the employee are going to be federal, the Social Security tax, which is the 6.2, the 1.45 on Medicare, and also on the employer side, we have the same amount. So the employer is also paying the other half, and it's the exact same amount because the employee and employer each pay exactly half of it. So my company, in this case, is taking the burden of the other side of Medicare, 1.45%, and the other side of federal Social Security tax, which is the 6.2%. And the total of what the employee pays and the company pays equals, for both taxes together, 15.3%. So I hope that this was visual enough that you can see that if I were to run a payroll for this one employee in my company, the employee pays half, and I, as the employer, am paying half. However, when you work for yourself, either as a freelancer or as a company owner, you are entitled to pay both sides of it. So you as a person will have the burden of the 15.3%, and that is on top of the federal and state and all the other taxes that you have to pay. And because this amount is so significant, a lot of people try to find a way not to pay the full 15.3%, and this is where an S-Corp tax election comes into play. And I'm going to explain why. So coming back to our circles here, you chose to open an LLC as your company structure, and you're choosing to pay taxes as a sole proprietor. And you have to pay taxes on an amount of $100,000 in net income. This is what your taxes will look like for this. So for this example, I am running a service-based business, which is mostly revenue, low cost, and I am choosing to analyze what happens if I file this as a sole proprietorship or a single member LLC, which is my case. I'm a single member LLC. So let's assume that I have $150,000 in revenue and I have $50,000 in business expenses. So that gives me a net profit of $100,000. Because I am choosing to file taxes as a sole proprietorship, I don't need to pay myself a salary. So I don't have a W-2. So you can see here, Julia W-2, there's a 0, 0, 0. And I don't pay payroll taxes. I don't pay the 12.4 Social Security tax or Medicare because I am just not earning a salary. I am only taking draws or distribution out of this business. So we jump to the second part here, and I am taking the $100,000 into distribution. Let's assume that that's what I'm doing, right? So I am paying the combined amount of 12.4% in Social Security taxes, which is $12,400. And this amount is capped at $168,600. And attention here, because this is one of the most important parts when you will make this decision. When I started my company, I had a W-2 salary. I worked parallel on my side gig and my full-time job for a few months, actually, almost a year. No, at least 6 months. And during that time, I was being paid a W-2 salary where I was paying self-employment taxes, half of the amount, just like we saw, and my employer, which was a marketing agency in New York, was paying the remaining amount. And the beauty of this, of working those two jobs, besides the fact that you're tired and you don't have time to do everything, is that Social Security taxes, which is the bigger part of this, right? So it's 12.4%, there's a limit to it, there's a cap. So once you reach $168,600 in your salary, you stop paying Social Security taxes. And I know that that's a large amount, but every amount that you earn counts towards your limit. So it's a universal source of income that you need to reach $168,000. And in my case, I was making above $168,000 in my W-2. So that meant that my company and my W-2 pay were taking care of those 12.4% of taxes, and all the income that I was making on my side gig. So in this example, all the income that I'm making on this $100,000, I didn't have to pay an additional 12.4% because that's a universal cap on the taxes that you're paying. I really hope this makes sense, and if it didn't, let me know below because that's huge. That means that if you're just starting, you don't really need to worry about this yet because you have a job, you have something that is taking care of this. And even if you're not making above 168,000, let's say you're making 100,000, your company and your W-2 are taking care of 100,000 worth of Social Security taxes. And in your model, your calculation, you need to add an additional 68,000 and then it stops. And then everything above 68,000 that you make, you don't pay 12.4% in taxes. That's a very important concept. But coming back here to the model. The other part of this, and in the model, I'm assuming that I don't have a W-2 anymore. I quit my job a year ago, actually. So I am trying to understand, as being a full-time business owner, what is the best scenario for me. And we calculated that out of this 100,000 that I'm making in net income, I need to pay $12,400 in Social Security taxes, and I also need to pay 2.9% of Medicare, which means $2,900. Medicare, unlike Social Security taxes, is uncapped. As an LLC filing as a sole proprietorship, you will forever pay Medicare taxes in whatever amount of distributions you're taking. So if you're making $1 million in net income, you are paying 2.9% on this $1 million, you are actually paying more because there is a bump of filers above $200,000. On the remaining amount from 0 to 200, you are paying an additional 0.9% on Medicare. So you're actually paying Medicare forever in whatever amount you're making. In this example, I am making 100,000, so I don't get to reach the cap of 168, but I also don't get to reach the cap of 200,000. So I'm paying $15.3 thousand in self-employment taxes, in FICA taxes. Now, I went a little bit further in my analysis to understand what is my amount of taxable income. And there's a difference here that I am calling your attention again, because this is a very important concept. Just because you made $100,000 in your business, it doesn't mean that you're paying taxes on exactly the $100,000. This is your net profit, this is your gross base, but there are deductions that you can take to get to the final amount of your taxable income. So your gross income is not the same as your taxable income. The same way that I mentioned in the payroll schedule in the W-2 when I was talking about the W-2, how if you make $2.5 thousand in a payroll schedule, but if you have a pre-tax 401k or if you have a pre-tax health insurance plan, this is not included for your taxable wages. You remove the amount first. As a business owner, we also do that. So here on this part that I'm highlighting, this is what we are calculating. So we are calculating that my total income was $100,000, but I can take a standard deduction, and this is something that everyone can take when you calculate your taxes, and the standard deduction of 2024 was $14.6 thousand. And there's also something called the qualified business income deduction, which sometimes is hard to calculate depending on the amount, but there's limits and thresholds to consider. But here we are using a 20% portion of profits. So 20% of 100,000 is 20,000. So that means that my taxable income, the amount that I'm actually being taxed, is the 100,000 minus the 14.6 minus 20,000, which gets me to 65. So I need to calculate how much taxes I am paying on 65.4. I added the 2024 tax brackets for sole proprietorships and for S-Corps in a table here, just so it's easier for us to calculate for both sides. Quick recap, I took this from NerdWallet, who's referencing the IRS. I checked in the IRS website as well. Those are the 2024 tax brackets, and they change every year. So you just need to adjust the table if you create a similar one to yourself. And as you might know, taxes in the United States work on a waterfall model. It's like a bracket that the amounts that you make, if you're single, for example, from $0 to 11.6, you will pay 10%. But then the amounts above that to 47,000, you pay 12, and you keep constantly paying more on the additional income that you make. So I took this table, I created a Excel table so I could calculate it in a more easy way, and I did one for C-Corps and one for sole proprietorships. So here I added the 65,400, that is my taxable income, on the table. It calculated for me, and that means that I need to pay a total of $9,400.41 in federal taxes. This is federal. So now I am entering this amount in my projections here, and then the total amount of federal taxes that I am paying as a sole proprietorship on $100,000 of income from my LLC is the sum of my distribution, self-employment taxes, which is the 15.3 here, plus the federal taxes on my taxable amount of distribution. So it's the federal plus the self-employment taxes, and that combination of these two create $24,741 in taxes that I need to pay. This is an effective tax rate of 24% and 74%. Why exactly do people say that if they choose to file as an S-Corp, they will save on self-employment taxes? Before even filing as an S-Corp, one thing that you need to know is that as an S-Corporation, if you choose to elect that tax classification of an S-Corp, you must pay yourself a salary. Like, you need to put yourself as the business owner on payroll. That means that you will probably purchase one of the tools that I just showed you. Like, I was using ADP, there are Gusto, there's JustWorks, there's multiple payroll tools that you can use. You will add yourself as an employee of your own company, and you are gonna run payroll for yourself. How much? This is a topic for a separate video, but it needs to be a reasonable amount of wages. So in theory, you should evaluate the hours that you're putting into their business and the type of work that you're performing, and you would calculate how much the position that you are performing in your company should earn as if you were to hire someone else to do your job. There's different methodologies to get there, but you would see, if you look at other YouTube videos, that some people say on 100,000 in net income, you pay yourself 40 or 50,000 and you distribute the remaining 60 or 50,000. So this is what you need to know for now, is that you need to pay yourself a salary. And the thing here, and this is the part that it's important, is self-employment taxes. When you choose to pay taxes as an S-Corp, it's capped to the amount of your salary, as your W-2 salary. So everything else that you distribute as a distribution, the remaining 60,000 in my example. So let's say you made $100,000, you're paying yourself a salary of 40,000, and you're distributing as dividends, distributions, or owner's draw 60,000, you're only paying self-employment taxes, the 15.3% that we've been seeing in all this video, on the 40,000. And then the remaining 60,000, it's free of self-employment taxes. You still, of course, have to pay federal taxes, but that's a big chunk that you don't need to pay. And we're gonna go back to the Excel model so you can see this live. So here is the same example as an S-Corporation. I am the only owner of this S-Corporation. I had a revenue of 150,000. I have business expenses of 50,000, and my net income is $100,000. Now, the difference is that I must pay myself a salary, and let's say that I'm paying myself a salary of $40,000, and that means that Julia, myself, I need to pay 6.2% in Social Security taxes, which means $2,480, and I need to pay 1.45%, which is half of 2.9, in Medicare. So in total, in my $40,000 that I'm making a year, I am paying 7.65% in FICA taxes, in payroll taxes, in self-employment taxes, the same way that we saw on that W-2 that I showed you. So as an employee, I am paying half of the self-employment taxes. My S-Corp and my S-Corp means the money that I would be otherwise making. So it's still a business, it's still my money, but my S-Corp is paying the other half, and the total amount that we pay in taxes is 6.12 in terms of self-employment taxes. If we compare the 6.2 with the 15.3 thousand, you will see that we are paying way less self-employment taxes as an S-Corp than we were as a sole proprietorship, because instead of paying 15.3% on 100,000 of net income, we are paying that on the base of 40,000, which is the salary that I decided to pay myself. Now, what happens to the distribution? Because I am distributing the remaining 60,000. I don't have to pay Social Security taxes, and I don't also have to pay Medicare in all the remaining amount that I'm distributing, because remember, Medicare is not capped. So this is $0 in taxes on the distribution amount. Now, coming back to the portion that we are calculating what happens with our return, our 1040 return. So in terms of wages, I have 40,000. In terms of Schedule K1, so once you have an S-Corp, you will receive a Schedule K1, or if you have a partnership, if you have partners, my S-Corp, I actually have partners in real life, so that's why I have the K1. But in terms of ordinary income or distributions, I have in this example 60,000, which makes my total income 100,000. I am taking the same standard distribution that we discussed before, the 14.2, and I'm taking a little less of qualified deduction because the deduction, it's only on the profits, not on salaries. So it's only on the 60,000, not on the 100,000. So if I calculate 20% of 60,000, that's $12,000 in deductions. So the basis of my taxable wages is higher. It's $73,000. And I'm gonna add that to my tax bracket here. So we have the 73, and we can see that the amount of taxes that I need to pay on an S-Corp is $11,201. So coming back to the tax projection, we have that amount here, $11,200, which is higher than the $9,000 that we paid as a sole proprietorship. But when we sum up the federal income taxes and the W-2 self-employment taxes, we get to a much lower amount. Instead of paying $24,000 in taxes, we are paying $17,000, which is an effective tax rate of 17.3%. So by doing this, in the amount of $100,000 in income, I am saving almost $7,500 in taxes. And this is the reason why people choose to file as an S-Corp instead of a sole proprietorship or a partnership. So you might be thinking, what's the reason for someone not to choose to file as an S-Corp instead of a partnership? Because clearly on that amount of $100,000, you are saving a lot of money. And there's actually many reasons. It's going to depend on your tax situation. It's going to depend on how much money your company is generating, not only in revenue, but in expenses, because what matters is your net income. So generally, they say that if you're not making around $100,000 in net income a year, it's not worth converting, because the difference in savings is gonna be much, much smaller, and you will actually have more work to hire an attorney, pay the fees that it takes to pay to file as an S-Corp. So it's much easier to file taxes in your normal 1040 as a sole proprietor than to involve a tax classification of an S-Corp. There's nothing crazy, like I've done it, so I don't want to make it sound that it's crazy expensive or it's crazy difficult, but it will be more expensive to file taxes itself. You will have to involve someone who's specialized in filing taxes, and that's an additional cost. And at the end, the difference in taxes might not be as significant if you're not yet making at least closer to $100,000. But you know what? You have to add that to the model yourself and add your specific case to calculate. I didn't convert as an S-Corp in the entire first year. Why? Because of what I explained before. I had an employer taking care of my Social Security taxes. I was making above the threshold. So it didn't make sense for me to convert, because the whole reason why I would convert, and my partners and I decided to convert, is because of the self-employment taxes. Since I didn't have to pay them on my company side because I was already paying them, specifically Social Security taxes, I would be paying Medicare regardless, it didn't make sense at that point in time, right? Like someone else was taking care of those taxes for me. At the time that I decided to quit my full-time job and this is the only income that I have, then it became clear that it would be beneficial for me after I ran this exact analysis that I would save money and I will continue to save money in taxes the more that my company performs. Because remember, even though we are capped at the 12.4%, which is the biggest chunk of taxes, you are always, as a sole proprietorship or a partnership, paying Medicare, that 2.9% plus the additional 0.9 above $200,000. So by paying yourselves a salary, me and my partners, we also avoid that continuation of Medicare taxes. And of course, you need to pay yourself a reasonable salary, like a real salary. One thing that people try to do is to pay themselves as low as possible. They pay themselves $10,000 in salary and then they take $150,000 in distribution. That is not wise because someone's gonna catch you. This is why there are those rules in place of a reasonable salary, but this is also a topic for a different video. This one's getting very long already. So what happened to me and what will probably happen to you and what happens to a lot of people is that you go in steps, you go in levels. Step one is you start a business, and in many cases, you have a full-time job on the side because it's hard for you to make a living only working on your side gig when that's not yet profitable. In that initial step, you're still trying to figure things out, you're still trying to take things off the ground. My suggestion is run the analysis so you can see for yourself that maybe it's not the wisest moment for you to make that selection of filing taxes as an S-Corp for your LLC. Even if you don't have a full-time job and you decided to go all out in your business and you're not yet making closer to 100K in net income, you might see that yes, you will be better off paying 15.3% of self-employment taxes. It is what it is. We need to pay taxes. We're not here trying to not pay taxes in the wrong way. And that's what it is until you get your business going off the ground, until you get to a reasonable level of net income. Then you go to step number two, you level up and you're making about $100,000, and then it's probably the time that you will evaluate making this change. But again, there's so many other things that you need to consider. Do you have another job? Do you have other businesses on the side? And what is the classification of those businesses? And this is why it's such a personal decision. I don't think there's any one rule fits all. My goal here is to bring awareness to you. So you have to sit down with a model similar to what I just showed you with ChatGPT. ChatGPT is actually very good, in my opinion, for those conversations. You can talk to Chat and try to understand your best scenario before you talk to a CPA. And then I would actually suggest you talking to a CPA. That's what I did. I sat down with someone to try to model it out. But to be honest, their hours were really expensive and they were not invested in doing the job that I did to figure out my personal scenario, because there's so many variables, there's so many states, there's so many rules. Nobody will be as interested in your own taxes as you are. So my suggestion to you is do your homework, talk to ChatGPT, run a model just like I did for your specific case, and just to save you some time. The most important things that I've learned when I was making this decision is that cap that there is in Social Security taxes, two, that there isn't a cap for Medicare, and there's actually an additional 0.9%. And 0.9% seems like, oh, it's nothing. But if you're making $2 or $3 million, you will forever have to pay that Medicare on the amount. So that is worth evaluating depending on the level of revenue and the level of net income that you have in your business. And the third thing that is important to know is it's really scary it was at least very scary to me to make the decision knowing that I was mandated to pay a salary. Because once you open an LLC only and you're filing taxes as a sole proprietor or a partnership, if you have partners, you are only taking distributions from the business. So you only take something from the business if you are successful, right? So if you are having an income, you take a distribution. But if not, you don't have the burden of paying yourself a salary. Like, it's not mandatory. And I was really scared to think that, oh man, like now I need to pay myself, I don't know, let's come up with a number of $50,000. I need to make $50,000, and that's an additional expense that I have for my business. What if I don't make enough money? So it's important to know that the safety of your business comes first. And if it comes to the point that revenue is going down, you don't have to pay yourself a salary every month. You can wait and see and stabilize your business. First comes the health of your business. You can lower the portion of your salary whenever needed. The important thing is at the end of the year, you look at what is your total net income, how much of that, if you chose to file as an S-Corp, you paid yourself a salary, and how much you paid as a distribution. And maybe if you took too much as a distribution and your salary is too low, you will have to then reclassify some of that distribution as salary and pay the taxes for it. But you can do that at the end of the year. So that is a little bit more advanced. I can record a separate video talking about this. But my goal today was to show you why people choose to file taxes as an S-Corp, why people choose to elect an S-Corp as your tax classification. So quick recap, because this was a very loaded video and I don't want you to miss anything. First thing is, if you like this type of content, if this has been helpful to you, please subscribe to the channel. Subscribing to YouTube channels is not intuitive at all, at least for me. Sometimes I watch videos that I love and I would never in a million years thinking about subscribe, but I am learning now as recording videos that it helps the channel a lot. So please subscribe to the channel. You can also like the video if you like this video, of course. And my goal is to turn those explanations and those terms as simpler as possible for you. So if I am not achieving that goal and you're so confused, also leave that on the comments, because I'll be happy to read and reply to you on the comments. So that's the first thing I want you to do. The second thing is the review. The review here is people in general ask, should I file taxes as an LLC or as an S-Corp? And we saw that those are two different things. You can open an LLC as your company structure, and then you have the flexibility that inside of this LLC circle, you can choose to file as an S-Corp, or you can choose to file as a sole proprietor if you are the only person in this company, or if you have partners, instead of a sole proprietor, you can choose to file as a partnership. So that's the choice within the LLC circle. Your LLC is not itself a tax classification. First point. Second point is the reason why people choose to file taxes as an S-Corp instead of a partnership or a sole proprietorship is because of self-employment taxes. It's because once you choose to file taxes as an S-Corp, you pay yourself a salary, and the amount of self-employment taxes that you need to pay are capped to that salary only and not the distribution. Whereas when you have a sole proprietorship tax classification or a partnership, you need to pay self-employment taxes on the entire amount of distributions. And we ran a model here with an example of $100,000, and you saw that in that scenario, you will be saving, or I am saving, close to $7,500 in taxes, in self-employment taxes, by running this model. So this is it for today. That was a long video, and thanks for watching. See you next time.